Good morning and welcome back, everyone. Today, I wanted to share with you a stock that has quickly become one of my favorite dividend payers, currently yielding about 10%, just a little under. And over the past few years, not only has it crushed it with paying out regular quarterly dividends, but has also paid out numerous special dividends. Now, if collecting this dividend income is something that you're interested in, let's get into it. The stock we are going to be talking about today is none other than Blue Owl Capital Corporation, ticker symbol OBDC. Formerly known as Owl Rock Capital Corporation, ticker symbol ORCC, some of you may have heard about it. However, a couple months ago, they changed their name to Blue Owl Capital Corporation as they're owned by Blue Owl, and they wanted to prevent any confusion and add coherence and consistency to the names. Now, Blue Owl Capital Corp is a BDC, or a business development company. For those who don't know, that is a company who loans out money to small, medium-sized businesses for funding. They are essentially a bank or a loan service provider for businesses, just to keep it simple. Now, the nice thing about BDCs as well as REITs is that they have to pay out at least 90% of their income to shareholders as dividends, because this will give them a tax preferred status. Now, unfortunately, this means that most dividends that we receive from business development companies as well as REITs are not qualified dividends. They are unqualified, but it also means we typically get higher dividend payouts. And if we're invested in a good one, which OBDC I believe really is, then for the long haul, we're looking pretty good. Now, if we head over into Yahoo Finance, you can see on their front page, we have a forward dividend yield of 9.71%, which if we go to their website is about 9.67, so it's pretty close. They're currently at 1970 at the close of yesterday, with a 1385 for the pre-market today. And if we go back through the past year to date, you can see that they are actually up about $1 here, a little over $1. They were 12.6 at the beginning of this year, and they're 13.70 now, so they're up they're up $1.64. And if we go for the actual 1 year, you can see that they're up, and over the max they are down, but you see this big COVID spike, and they've been trending pretty flat, slightly up since then. Combined with their dividends, it's pretty good. If we look at their earnings, you can see that their earnings, they have consistently beat their earnings each quarter. And if we go into their dividend history on their website, you can see that they have paid quarterly dividends as well as a bunch of special dividends ranging in amounts. Their quarterly dividends started off at about 31 cents per share, and a couple months ago, over at the beginning of this year, they actually increased it to 33 cents per share. Oh, actually, sorry, I apologize. That was late last year. They increased it to 33 cents per share. In addition, almost every quarter, they have issued a special dividend, with this one being 7 cents. For this upcoming month, there will be a 7-cent special dividend, which is the largest one to date, I believe. The previous biggest one was the last one they issued, which was in June, for 6 cents per share. Now, keeping that in mind, the 9.71% dividend yield, that is only including the regular dividends. That's not including the special dividends that they're currently issuing, at least to my knowledge. If it is, that explains why this dividend yield might be slightly off compared to what you will find on their website. However, for the most part, it's not too bad. Now, is this company stable? Is this dividend yield sustainable? Well, if we go and look at their revenue and earnings history, we can see that they are consistently growing both their revenue and their earnings. Right now, I can't say that their dividend will keep on growing as it has over the past few years, or that the special dividends will, also keep growing as it appears that they have as well. But the dividend right now seems that we are actually doing pretty well. When we're looking at an EPS of with increasing amounts, and we're looking at revenues that are also increasing, unless the company does something wrong, we're not looking too bad as far as having a sustainable dividend here. So even though we take a look at the stock and we see that they had a relatively sideways trend as far as their share price after COVID, combined with their increasing and also high yielding monthly dividend or quarterly dividend income, as well as their regular special dividends, even though those are much smaller, you are looking at a pretty good return on investment after those dividends have been reinvested. Or even if they haven't, you're still going to be looking at a slight return on investment. Taking a look at all these metrics, seeing that the dividend yield is at the moment sustainable, even if it doesn't increase further, or even if they don't pay as many or as large special dividends, you will still be looking at pretty good times with your portfolio if you have your drip turned on. And then you consider their actual dividend yield, 9.71%. That is massive. Now we understand that it is a BDC, and BDCs typically tend to have slightly larger yields, but there's also a lot of BDCs out there that do not have quite as strong metrics as the ones we've looked at today. So to find a high yielding stock like this that has shown growth over the past couple years and has good metrics, this honestly seems like a gem in the rough. And with all of that said, thank you for joining me here today as we talked about Blue Owl Capital Corporation. If you like this video, please let me know down below, or if you have any other thoughts about this at all, please let me know down below. Also, please consider liking this video or subscribing to the channel. It'll really help this channel grow and gives me motivation to keep bringing you videos like this. With everything said, until next time.